Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. We made it through the weekend again. What do we got going on in the stock market? Dow's up a couple hundred. NASDAQ's down about 60. Okay, so why is the Dow up a couple hundred? Well, First Citizens Bank, they're going to buy Silicon Valley Bank. This is kind of like a merger, right? Their banks are going to consolidate. There's going to be fewer banks. The big banks are going to swallow up the little banks. Now, I'm not saying Silicon Valley was a little bank. It was the 16th largest, I believe. Well, they're getting bought out now by First Citizens. Now, why would First Citizens buy out a failed bank? Well, it's because the Federal Reserve is going to guarantee First Citizens that none of the toxic assets will lose their money. If they lose money, who gets to pay? Well, we get to pay. Taxpayers get to pay. So it's kind of a bailout. First Citizens, they get all the good assets, and we, the taxpayer, get all the toxic bad assets. It's kind of like a win-lose situation, right? They win, we lose. All right, but it makes the stock market go up because these bank runs, these bank failures are good for the market because we know that they're going to print more money, and printing money makes things inflate, makes the bubble stay up, right? Makes it go bigger even. If you can print enough money, we can get the bubble bigger. All right, so the S&P now, the S&P rose up today, went up right to its 50-day moving average. And that's where it's been trapped. It's been trapped between the 50-day and the 200-day. It's really going nowhere yet. Now, my play on this is in the downward direction. I think we're going to go down. I think we're going to take out those October lows. It's taking a little bit longer than I thought it would take, but that's my move. Playing the market to the downside. Now, here's where you got to be careful. If we get above that 50-day, we're going to get what's called the short squeeze. People are going to jump into the market and they'll push it up to the 4,100 level. Now, if it gets to the 4,100 level, that is a gift for the short sellers. I actually would prefer that we go up to the 4,100 level so I can increase my short position because I'm playing this to the downside. That's my take on the stock market. Yours may be completely different. All right, so let's move over to the real estate market. Now, they always have the best articles over the weekend. And this article I was reading, it says that, well, housing activity has it's picked up in the last 2 weeks, right? There's been more activity. People are buying houses just in the last 2 weeks, right? It's almost like they're day trading. They got it narrowed down. In the last 2 weeks, houses have picked up. The trading volume has picked up. Well, here's the thing that they say. They say that the housing power dynamic, never heard the term before, been a broker for 40 years, never heard of housing power dynamic, but it's shifted again. It's shifted back to the seller, meaning the seller's in the driving seat. Now, here's what was really funny to me. Okay, so the National Association of Realtors, they came out and they admitted that year over year prices are down. But oh, no. Redfin, they have this figured out, right? They're talking about, National Association's talking about the selling prices for homes are down year over year. Okay, well, it's down about 2 or 3%, right? But Redfin says, oh, no. The prices of homes are up year over year by 1%. That asking price, not the selling price, this is what the article takes into account. The asking price is still up year over year by 1%. That means we're still in this bull market for houses. Really? You got to go to the asking price over the selling price? Well, here's what they also pointed out. They said that 25% of homes that sold in February sold above the asking price. Okay, so the asking price is up 1% year over year. 25% of the homes sold above it. Well, let me think. Well, that means 75% of homes, the majority, 3/4, if you will, sold below the asking price, right? Which means homes are on the way down. But you wouldn't catch that from this article. No. Now, home buyers, that have gotten used to being in the driver's seat. Now, you home buyers out there, are you used to being in the driver's seat, meaning you're dictating the terms, dictating the price? I don't think you're in the driver's seat yet. Okay, but home buyers that have gotten used to being in the driver's seat, well, they better act fast because the deals are going away. If you don't act, the deals are going to vanish. You see, before the banking crisis, before the financial crisis, before the bank closures, the sellers were not making, they were making deals, right? They were giving you prices reduced by about 10, 13%. That was before we had the run on the banks. Now that we had the run on the banks, those deals are gone. You see, run on the banks, a financial crisis is really a good thing for real estate. It makes prices go back up. Now, to me, this is fascinating. I just get a kick out of it, right? But those deals that the sellers were giving the buyers, those deals they're gone now. They're gone, right? Because we've had these bank runs. We've had these bank closures. So the sellers have removed these deals from the marketplace. Now, this is just insanity to me. Now, who wrote this article? Did Redfin all of a sudden buy Yahoo? Maybe Redfin bought Yahoo and nobody told me. This article was obviously written by realtors. And take my word for it. Look, this is the worst time possible to buy. Prices are still elevated. Interest rates have went from 3% to 7%. Well, you can get a deal right now because we've had these bank runs, because we've had these bank closures. You can now get a deal at 6.6%, down from 7%. But you better hurry up because the deals are going away, right? Okay, the deals are going away. Now, in my opinion, this is a terrible, terrible time to buy. But once again, just my opinion. You can go talk to your realtor. Always a great time to buy. Go talk to Dave Ramsey. Jump in the housing market before it's too late. Well, look, anyone that's crazy enough to pay these high prices for homes, they're going to be a lot poorer in the next year or two as the prices continue to come down. They're already falling. Look, we're up pretty much free falling by my definition, right? Okay, houses that, once again, don't crash like the stock market, doesn't come down in one day. No. House crashes play out over years, it could be 2 or 3 years, right? But we've come down the fastest rate in the history of recorded prices of houses since June. June of last year till now, we're down about 13%, which is about an 8-month period, right? 8 months. 13% in 8 months. Never happened before. This is the fastest that homes have ever come down. But if you read this article, you got to hurry up and get in because we're going to go right back up. I don't see it that way. I just don't get that. Now, I think if you go buy one now, you're going to be very sad a year from now, 2 years from now. Now, why do I think that? Well, first of all, I think this banking runs, the bank closures, I don't think this is over yet. I think the financial crisis is here, and I think it's going to hit pretty hard. Look, they had that Fed meeting, well, not the Fed meeting, Janet Yellen, Secretary of Treasury, the head of the Fed, Jerome Powell, the head of the Commodity Futures Trading Commission, the CFTC. They all got together over the weekend. They don't work on the weekend. Why did they get together? Well, because they're scared, because they know the system is on the brink of failure, and they got to keep this propped up. They got to keep the confidence out there. They found someone to buy Silicon Valley Bank, but there's already contagion that's running out there. Look at PacWest Bank. Look at their stock. It's plummeting. They just got a loan for $1.6 million. I think that was from the Fed. These regional banks, they have lost 20% of their deposits. There's been a run on all these banks, down 20%, and that money is flowing into the bigger banks because those are the only ones that Janet Yellen says are safe. They say the regionals aren't safe because, well, They're not big enough not to fail, so those may fail. But you got to understand that banks, they're all intertwined together. If Dutch Bank goes down, Dutch Bank is in a lot of trouble. The derivatives are exploding higher, and that means that the bank is in big jeopardy of going under. Credit Suisse is going under. One of these big banks goes down, it's over because all the banks are intertwined. Now, do I think this is good for the housing market? No, I do not. But if you read that article, they'll tell you that this is really good and you should hurry up and get in before more bank closures come, before the banking system goes down. You want to lock in to be in a house before the bank failures happen, right? Before the financial crisis completely blows up. Lock in your rate, get in a home, and watch it topple. Oh, it's good stuff. Good stuff. You just can't make this up. But okay, so the financial crisis is a good reason not to be buying a house right now. But here's the other reason you don't want to be buying a house right now. Look, there are layoffs, lots and lots of layoffs. Now, I mean, there's companies, Accenture laid off 19,000. You got, what is that? Indeed, I think they're the ones that do the online job search thing. They're laying off 15% of the workforce. Amazon just came out with another 10,000. 10,000 nothing to Amazon. Believe me, don't worry, your delivery driver's not getting laid off. These are high-paying jobs. Amazon's going to lay off well over 100,000, maybe 300,000. Layoffs, that's right, layoffs, yes, that's what they wore. They hired 200,000 people since the pandemic, and now the pandemic, the stimulus money's gone. People aren't buying as much, so the Amazon, they're going to start to lay the people off. But these job losses, okay, so there's a delay effect, right? People get, let's say you got laid off from your job today. Let's say you worked at Amazon, and they came in and said, oh, tall Mike, you got to go now, right? You just got laid off, and let's say you were making $200,000 a year. You got a wife, you got 2 kids, you got a mortgage payment, right? All right, well, you were making 200, 250 maybe, okay, which was really good money, right? Well, how are you going to replace that money? Well, you got a problem right now. You're levered out on your house, and that's where you got some equity in, so that might buy you a little bit of time. And maybe Amazon was nice. Maybe they gave you this golden parachute of a couple months of pay or something. So there's this lag effect. You get laid off today. Well, I still got a couple months of pay. Oh, the pay ran out. I can't make my mortgage pay. I can't make it this month. I don't have the money. See, a lot of Americans, they live month to month. All right, so I don't have the money to make the mortgage payment this month. Well, that's okay. That's okay. I can get, 3, 4, 5 months before the foreclosure process starts, right? Before the process starts, before the sheriff comes and puts me out on the street. So I still have time, but, you don't want to cut it too close. So there's going to be a little bit of a lag. So you got a couple months of income, a couple months of savings, and a couple months before you start to get really nervous that the sheriff might come. And that's where the forced selling comes. That's where the house goes onto the marketplace. And there's going to be a lot of these houses coming onto the marketplace. But these layoffs, there is a delay time between the layoff and between the time the house goes up for sale. But they are connected together. The layoffs happen, the houses come for sale. It's called the foreclosure. For sale. It may not go to foreclosure. It just may that they sell their house to get the money out because, they can't refinance now because when they bought the house, it was at 3%. So they can't pull money out because if they refinance, it would be at 7%. So they can't do that. They don't have a way to get the money out. Yes, they can get a HELOC loan. Those are up around 8, 9, 10%. They can do that. And that can tie them over for a little while, for another few months. Why? But, okay, but eventually the forced selling happens. Now, yes, some of these people are going to go find other jobs. Some of these will be lucky enough to get on at Chipotle. They're hiring. But anyways, I make fun of Chipotle. I love it. I just ate there this weekend. 2 thumbs up. It's good stuff, right? Right? Good. Anyways, I got distracted there. But my point is that there's a delay. You get laid off. You have a little savings. You have a little golden parachute where they give you a little going away bonus. And then you have a couple couple months before that house is really getting delinquent. There's already over 1.5 million people delinquent on their mortgages right now. And those are going to be coming onto the marketplace. Now, everybody's going to tell me, but Mike, in my area, nobody gets laid off in my area. My area, we're getting multiple offers 10 at a time. It's a great area I live in. We're only going higher from here. You know, I don't want to stop you from going out and buying a house. Matter of fact, I want to encourage you. I'm a real estate broker. I'll sell you one of these houses. Look, 2 years from now, it's going to be lower. That's just my opinion. Your opinion is that it may be higher. Your opinion may be that it's a great time to go out and buy a house. And if you want, well, I'll sell you one. That's my job. That's what I do. I'm more than happy to sell you one. But I will make you sign a piece of paper. The piece of paper says that this house can go down by 50% and you cannot sell the stupid realtor that sold it to you. I'll make you sign that piece of paper because these houses, they're going lower. Once again, just my opinion. I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Monday. We got the whole week ahead. Hit the subscribe button. There's some exciting stuff I got this week. Anyways, I'll talk to you again real soon. Get out there. Have a great day, everybody. Bye-bye now.